Welcome to the Game Plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. I got a whole bunch of things to discuss today. Not only is Jerome Powell testifying today again, but we also have a bond auction at 1 p.m. for the 10-year, and that could be pivotal. So lots of things to watch today. Tomorrow morning, Pepsi reports earnings, as well as Conagra and Delta Airlines. And then at 8:30 in the morning, you know what happens, right? The CPI is reported, and I think that's why the volume has been so light so far this week. Everyone is waiting for that CPI data. So we're going to look at the markets today. I've got some big charts to show you guys. We're going to analyze the chart of lumber, which is telling us that deflation is potentially on the horizon, as well as a recession, and we'll go from there. All right, into the action we go. Boom. Love it. All right, so as we get in here, guys, let's look at what we have on the S&P pre-market. And on the S&P pre-market, one of the things I'm seeing here is that we have a float up. Now, I looked at this float this morning, and I said to myself, okay, so the S&P is up again, right? And the question is it because that it's a wide-ranging rally, or is it just a few stocks? So what I did was I flipped over to the RSP. Now, the RSP doesn't have a lot of volume, but this is the ETF that tracks the equal weight. And look at this here, pre-market, guys. The ETF for RSP is literally flat. A few prints have gone off sideways. This is where we closed yesterday, right here, and it is literally flat. So what does that tell us? What does it tell us when we see the S&P higher, the NASDAQ 100 higher, and the equal weight is sideways? It tells us what is moving. Like, literally, you don't even have to look at quotes. You just say, okay, equal weight's flat, S&P, NASDAQ up, so NVIDIA's up, Apple's up, Microsoft's up, Meta's up, Google, Amazon, maybe even Tesla after its monster run. And you'd be right. Today, dead on. And that's the market, folks. At this stage of the game, we have such confluence or such a massive overload in market cap in these mega cap stocks. In fact, Apple just surpassed $3.5 trillion in valuation. So such a massive amount of market cap that is basically now 36% of the S&P 500, that if those stocks are up, it's going to take the whole index up with it. Now, again, equal weight's the real market. If you want to look at a market, look at the equal weight. And if I flip to the equal weight daily chart right here, and we zoom out, what does this show us? Well, it very clearly shows us on the equal weight here that we do not have a market that is making new all-time highs. Now, granted, yes, the headline indices, S&P, NASDAQ are making new all-time highs. But if we look at the equal weight put in a high late March, right there, right? So late March, that high was a valid new all-time high on the S&P. But since then, look at what's happening. You're starting to create what I would call a wedge pattern. And the wedge pattern is this kind of tightening spring that is going to break one way or the other. Are we going to get a rebound in the equal weight, the other players there, maybe some money rotation from the mega caps where we start to rally up and make new highs? Or is it just going to get really bad for everyone and we see the equal weight starting to collapse? So I'm going to look at this and I'm going to continue to follow it with you guys, and we'll see where things go. Couple other things to go over this morning. The yen is continuing to weaken. Here is my dollar-yen chart. We can see if we zoom up into the top right corner there that after a quick pullback on the dollar-yen, so the dollar-yen broke out here, went up, came back, tested a couple days. It's now starting to move up. My guess is it's going up. Remember, this is a chart that, while it hasn't been talked about in mainstream media, is a chart we want to continue to follow. All right, couple other charts that I want you guys, on watch for. We have Baidu. Now, Baidu, again, yesterday surged 8.5% on the back of robotaxi news. Basically, China's already rolling out robotaxis in their cities. Pretty impressive stuff. This chart was beaten down. Beautiful channel, and look at the channel, folks. This is the type of chart that I love, and we do have this as a long trade, and I think we're up about 8% in the smart money stocks and ETF service. But what we can see is this channel line. Every time it hits this channel, it gets a bounce. Even here was a pseudo hit up. So the idea is that was your buy point right there. Trend line, just use it. Use history, look back, say what happens every time this line hits. There it is. And sure enough, we get that pop up. Now, same kind of recourse is when it gets to this level, what happens? It gets rejected. So eventually it probably breaks out, but if it gets there, you would assume you would get a pullback on Baidu. All right, so that kind of brings up a couple key things. We did have earnings from Manchester United this morning. Not much movement there. Almost nothing going on there. Not even worth talking about. But again, as I mentioned, Pepsi tomorrow, Delta Airlines, Conagra, and then don't forget on Friday we have the big banks, JP Morgan, Citigroup, as well as Wells Fargo. Now, Citigroup is an interesting chart. Let's flip over to Citigroup now, because take a look at this. It is extended, very, very extended. Look at the chart here. This is the run that Citigroup has had, and we've actually been putting in a potential topping signal going into earnings here where we can connect these lines and they start to coexist, right? So here to here, right through here, and we go right to that top, and then you have this little top right here, same zone. So for me, when I look at this chart, I favor the downside on earnings, mainly not because the earnings are going to be bad, but more so because the stock has just had such a meteoric run that it's raised the bar. So again, the higher a stock goes into earnings, the more the bar goes up for what they have to report because it's already being factored in. Remember, as price of a stock goes up, their earnings expectations go up as well. So it goes almost neck and neck, right, together. And it ultimately means that if for some reason they even show some sort of maybe some negative, that can create a pullback. So I'm actually looking for a Citigroup pullback on earnings Friday morning. JP Morgan, it's kind of in the same boat. If we look at JP Morgan real quick here, let's take a look at that one. It is at the higher end. I also have a channel here, which is a pretty impressive channel. Take a look at this parallel channel. It's not quite at the high end of the parallel channel, which opens the door to maybe a small move up on earnings before a sell-off. But I just look at these channels, and I know a lot of you guys refer to me as the channel guy now because, again, I always talk about channels, but they freaking work. So why not, right? So here we have this high, we have here, here, here. Then you sell off down here, here, and here, and then you rally up. The idea is if we get up here to about this, so it looks like around the 215, 210 level, we likely would see a pullback on JP Morgan. All right, so I wanted to talk about that today. Again, those bank stocks. If we look at Pepsi, which reports tomorrow morning, let's take a look at that real quick. To be honest, I look at this chart and you can see there's some former trend lines here. Not a whole lot of information. The stock isn't at like all-time highs. It's not a vertical chart. If you look at back, this is 2021, right? So really here in 2022, this is 2022 right here, the start. What's it done? It's done a whole lot of this throughout 2022 all the way into 2024. And so as a technician, it doesn't give us a strong bias of being overbought or oversold. Now, it doesn't mean that you can't find things in the chart. So what I mean by that is that if we look at this, to me, there is a very important trend line right on the chart. In fact, I'm going to draw it in right here. And what we could do is we can take these lows and pretty much simply just draw a line below these lows, right? So you have multiple trend lines right in this vicinity where we can just, again, put them through, and we get a lot of key supports right here. Now, a lot of people would look at this and say, oh, well, does this mean we buy Pepsi? I would say no, it doesn't. Now, it also doesn't mean I'm going to short it because it's still technically holding support. But what this does make me very aware of is that the more you hit on a trend line or trend lines, and you guys know this if you've been following the game plan or me at Verified Investing, the weaker a trend line becomes. Remember the old analogy I love to give you guys, which is if you have a locked door in front of you, and let's say your cat's inside or your dog's inside and your house is burning down, you're going to try to break that door down, right? And so by doing that, it's like, okay, well, I'm going to ram the door, I'm going to ram it again, and I'm going to ram it at some point, whether it's 3 times, 4 times, 10 times, whatever it is, that door weakens and it breaks down. And so the idea here is that you don't know if it will be this time on earnings with Pepsi, but the idea is 1, 2, 3, 4, 5, 6, 7, right? So you're basically at 7, and that almost looks like a Head and Shoulders, by the way. Some of you might be even thinking that over there, and you might be right. But the idea is it's hit so many times is that you don't know for sure if it's going to break, but there's definitely the possibility that it could break on earnings. And again, if we know one thing, we know that investors, or I should say consumers, are cutting back. Fast casual. By the way, I just heard that Mod Pizza might be filing for bankruptcy. If you're in Florida, you probably don't know that, but I was living in Oregon for a while. That was actually a pretty good place. Little fast casual restaurant again. Another one that is likely just literally weeks away from filing for bankruptcy, which is, again, it's another signal the consumer is unfortunately turning away from these fast casuals because prices have gone up, inflation's gone up. They don't have the income to do that anymore. All right, so that's the idea there behind Pepsi's chart there. If we look at DAL isn't anything that spectacular on a trading front either. The stock has had a bigger move up recently, but it has already corrected. And if I look at this chart, and we look at it right here, right? So what are we looking at? So you had the big drop over here in 2020. This was COVID, right? So COVID collapsed. No one was traveling. Big drop. Since then, it's kind of gone up, and then just a whole lot of sideways chop. So what you can really do here is you can almost put a low here and the highs right through here. And it does just tell us that it's been range bound. Now, if I look at this, is there any inkling on directional move? And the answer is not to me, and I could study it a little bit more and probably find some more interesting factors. But for the most part, it doesn't scream. Like, one of the things I tell all my traders is that you shouldn't have to look hard into a chart to find a good trade, right? So when I look at a chart and I scan hundreds of charts a day, hundreds and hundreds of charts. I basically want to scan a chart for about 1 to 3 seconds. And if I don't see something obvious that pops out at me in 1 to 3 seconds, on to the next one, on to the next one, right? And the idea is that a trade, you shouldn't have to, like, once you start looking into the chart and you're like, oh, well, if I connect this low to this low and then go up here and then do this and then do this and this, once you go to that extent, your brain starts actually, it's a figment of your imagination where you start to create trades. And we don't want to do that. There are standard patterns that work, right? It's technical analysis 101. Bear flags, bull flags, time counts, double tops, double bottoms, reversal candles, engulfing candles. Those are the types of things that we know work from history, and we have to just say, okay, does this chart have it? Nope. Okay, move on. Don't force a trade, in other words. There's always another trade around the corner. Speaking of potential issues here, I do want to show this chart of lumber. This is pretty amazing here, guys. Remember when lumber was the hottest thing out there? It was sky high. It was all up. It was, you go to Home Depot. I even did this, and like a piece of lumber was like massively overpriced. Well, guess what? We've just seen a massive collapse on lumber here, folks. It is actually pretty astounding, I have to say. And what does this tell us? And you can see here, when I zoom out on this chart, this is where lumber was at those highs back in 2022, the beginning of 2022. Look at where it is now. Not only that, but when we zoom in, you can see there was a bear flag, and it looks like it's even going lower. The only reason why lumber is suffering here is basically because of real estate stalling. And this is, by the way, up until 3 months ago, I would talk to people and I would say, hey, listen, guys, you do know real estate's going to tumble here. And then, oh, no, it's not. There's so little inventory. There's no way prices are going to start coming down. And now all of a sudden things are looking different. Inventory is spiking. People are like, holy cow, my insurance rates are going through the roof. I can't afford to stay in my home. We have hardship loans being taken out on 401ks left and right so that people can actually stay in their home, which is the worst thing. It's a last resort to borrow from your 401k. But the idea is that if this was dropping like this is a precursor to essentially telling you a recession is coming. And that is a good economic indicator. In fact, commodities in general are good economic indicators. Even oil is, right? When oil starts to drop, it's because people start to think that, oh my goodness, the demand is going to slip. Speaking of which, China just last night reported that their inflation numbers were negative, which is actually deflation, not disinflation. Disinflation is just where you have like 6% inflation and you come down to like 4% or like 3 to 2 or whatever. That's just less inflation. Deflation is actually prices going down. Many of us would say, wow, that would be so nice to see prices actually go down for a change. The problem is it tells you China is not recovering. So the economy in China, they've done a lot of stimulus there. It is not working at this point, and that's telling us something because they're in deflation. I actually think the U.S. might be headed there. My only fear, and I've spoken to you guys about this before, is that if we get deflation, in my opinion, it's going to be short-lived, and then we're going to go right back to inflation because you know why? Because the Federal Reserve is going to look at it and say, wow, this is a green light for us to start printing again, running our balance sheet up to save the recession that we're in and get us out of it. And the government's going to say, oh man, deflation? Who cares about $35 trillion in debt? Let's just start spending like crazy because it's deflation. And what's going to happen is it's a whole whirlwind. It brings it right back to inflation and pops things right back up. And that's the cycle that I'm worried that we're in right now. Okay. Back to lumber. Look at the bear flag. I had written this and annotated it out. Look at the breakdown here. I love this. break down, retrace to the scene of the crime, retrace and break down, and now we're chopping and actually starting to trade lower again. But this chart again on lumber is not a good economic indicator. Another bad economic indicator here, nickel. I've talked about this before, guys. Look at that rollover in nickel. So nickel was spiking up with copper. Copper's held up. It's still down off the highs. But look at the drop on nickel here. And that's another major industrial metal that is showing us a lot of weakness in the overall economy. All right, so I just wanted to go over those. I guess we could also look at wheat here. I don't really look at these very often in the game plans, but I do think it's good to check in on them every once in a while. Even look at wheat, guys. That is not a good rollover on wheat. So we're seeing commodities, except for oil. Oil's still hanging in there, but remember, even oil's starting to come in, and I called that top right there on oil as it starts to roll over. So wheat again collapsing back down. This now again is in a position to tell us that things are slowing down economically quite a bit. Okay, on that note, folks, I want to do the spin on our wheel real quick here. So let's go to our comments from yesterday and our sharing. And by the way, I appreciate you guys sharing quite a bit. But let's roll it out. We had the 1 minute scalpel. Oh, there we go. The 1 minute scalpel is what we're giving away, which is Dr. B's course. Amazing course at that. And it will be given away today. And there it is, Kyle Peter 3370. Well done, buddy. You just won the 1 minute scalpel. Reach out to support at verifiedinvesting.com. Before I jump into spinning the wheel, really quickly, guys, Monday is Investor Empowerment Day. Big day here at Verified Investing. We're going to have other people coming in to give you guys quick little blurbs. I'm going to be running the trading floor right from this studio for 2 hours in the morning from the live day trading room, the Apex live day trading room. I'll have my headset on for all the members. I'll also be taking questions. You guys can ask questions out there. I believe Ben will be on my head trader as well. And we're going to be trading live here for 2 hours while also talking about other things, answering questions, and just crushing it on Investor Empowerment Day. And remember, Investor Empowerment Day is about the playing field being evened between institutions and retail investors, and that's the goal. I want Verified Investing to be that bridge of truth, data, and honesty between the institutions and the retail investor, where people can come to us and say, hey, listen, I want the data. I want to understand insider buying and selling. I want to understand key technical aspects and learn these things. These are the things that institutions use, right? Like VWAP. Dr. B's huge on VWAP. He always says is that he started paying attention to VWAP when he heard institutional mega traders saying, hey, buy it when it comes back to VWAP. Boom, right there. You got to be paying attention. You got to know this type of stuff, and he's working on a course right now. So all these type of things. But either way, folks, well done, Kyle Peter. Reach out to support at Verified Investing. All right, follow me over here, guys. We're going to do a quick spin of the wheel and find out what tomorrow we will give away. Oh man, this one's landed quite a few times here. Smart money crypto, but it is hot. Yesterday we took another gain on SUI, 16.25%, I believe, if I remember correctly, on SUI. And again, that was a trade we just bought about 4 or 5 days ago on the crypto alert system there. And again, awesome job there. Well done. We'll be giving away smart money crypto. Okay, guys, the other thing we're going to do right now is we're going to take 30 seconds to thank Lux Algo. They're going to play their commercial. And this again, it goes hand in hand with what Verified Investing does, right? Their data, they're all about data and chart signals, and that's what we do here at Verified Investing as well. And so don't forget, the link is down below, but let's take a 30-second break.
Have you considered enhancing your trading experience? We have an amazing tool for you. Lux Algo creates next-gen trading indicators to help the world understand the markets in a smarter way. They have the largest user profile on TradingView and are the only official Discord partner in the technical analysis space. Lux Algo Premium operates seamlessly with top platforms, such as TradingView and Discord, making it the perfect tool for every trader. Take your trading analysis to the next level with Lux Algo. Please visit the description below and sign up for Lux Algo today.
All right, guys, we are back. So rock and roll here. I just was notified I might have been showing the wrong chart there, but this is the wheat chart right here. It almost is identical to the nickel chart, but the point is, again, look at the rollover that we have seen in wheat here, and that is just an incredible move up, but a reversion right back down, which, by the way, when you see a chart go like this and then do a full reversal, you know what it usually happens? It goes like this. You do get a bounce, but what type of pattern formation is that? Bearish, right? And that means you're likely headed lower. And then just to recap here on nickel, we can just quickly go back, and nickel almost looks identical. Here's your nickel chart. Same rise and collapse right back down, and you see that same pattern forming. When you reverse a full move, it's never good. By the way, that's one of the reasons why I use Fibonacci, because when you get a big move up, you usually get a retrace. My favorite retraces are the 50% and the 618, and I'm just estimating that that's right. But the idea is when you get back here, you usually get a pop, maybe new highs, or if you get back here, you get another pop there. But once it gets back to the full retrace of 100% retrace of the up move, that is not a good sign, folks. Generally, it means bear flag and going lower. And again, just think about it logically. Is it if you ran a marathon and all of a sudden someone literally picked you up and put you back at the starting point, you'd be like, WTF, like what the heck, right? That's just not good. You don't want to have to run that again. It takes a lot of energy to do this move, and then you get you basically get pounded back down, and then people are like, oh, well, don't worry, just go up here now. Well, that's a lot of work to get up there, right? All right, a couple little tidbits there. Let's go to Bitcoin real quick and just touch base on Bitcoin. We'll touch base on our other commodities. Bitcoin overnight got close to my target zone here. Target is, again, about the 60 to 61,000 level. It got to 59.4, I think. I still think it's going to go up there, but my big concern, again, is that if we do get up in this zone right here, does it then have that next move down? And so I'm keeping a close eye on the technical support of 52,000. That's this line right down here. Resistance is 60 to 61. And again, we will keep an eye on that. Gold getting a little bit of an uptick here. Again, interestingly enough, little side note here, I was short gold from over here. We were in the money, out of the money, in the money, out of the money. Once it confirmed here, I actually covered my short on gold because my mid to long term is bullish. So when I bought over here, my short term was bearish. But look, over time, it becomes midterm, right? And so I'm not saying that gold is ready to surge yet, but the chart itself was not a high enough probability for me to stay short on gold. So I actually covered for a 0.74% loss, less than 1%. You know, very small loss there. But nonetheless, it's important to recognize that when you can and step aside. And now I haven't gone long yet because I'm not confident again enough in that. But one little tidbit. Institutional money is heavily long, hedge fund money, I should say, is heavily long gold. Remember when they were heavily short oil, oil went up. So I do wonder if there still could be some downside just because maybe there's a little unwind in that institutional hedge fund money that's long, as it would be the inverse of the oil move, right? But at the same time, I also think retail investors and central banks are still buying, and they're still retail investors are heavily underallocated in gold. So if that can maybe negate it, maybe gold can still move to the upside. All right. Quickly looking at silver, then oil. Silver doing the same sort of thing. It did break above here. I don't have any positions on silver at this point. I would buy back here at around 29.50 and then add if it got down here. But either way, I'm still in the bullish camp overall that silver and gold do very, very well. And lastly, real quick, guys, we want to look at oil, which again, we could see right here on the chart. You've now had 1, 2, 3, 4 down days in a row. Granted, we don't know where today will end. We get inventory numbers out at 10:30 a.m., but we are coming into a small minor. This would be a minor support only, but we can see why it would be a support line, right? So right here around 80 to 80 and a half, $81 per barrel, there is support. If I had to game this out and say what I thought was going to happen, I think you get a small bounce here, and then you get the bigger flush to the downside, and eventually we're back down here around $74 per barrel. And I continue to hold a short on oil here, folks, as again, it coming in, and even if it bounces a little bit, I'm not too concerned about that, as I do think it'll go lower. Lastly, natural gas, guys. Natural gas chart here real quick. And if we look at nat gas, it is just hugging this level of support. This is only a minor level, just a trend line from here. But again, you can see how price at a minor level, how it acts, right? It still gets some support, right? Just because it's a minor level doesn't mean it's going to ignore it. It just means that the bounce is usually less volatile, and it can be much kind of quicker. And so what you're getting is you're getting this, and I still think we're headed down to 215. 215 for me. I will be potentially inching into a small position. Don't know yet because, again, I have to see how it gets there. It's very important how it gets there. The journey is a major component of whether a trade will work out or not, by the way. But that is something, again, you can see right here. This is also, if I remember correctly, a 0.618 move from this low to this high. So that would be a 618 Fibonacci. I love it when the fibs match up with technical support levels. It usually increases the ability for a bounce to occur. All right, wow. So lots of action, guys. I know we're still not at the CPI data or any of this other stuff or earnings, but it just shows you that there are things going on here that you need to be aware of. Economic indicators like commodities that most people don't look at, lumber, wheat, nickel. These type of things can tell us things about what the economy is likely going to do. Yesterday, Jerome Powell testified. He did say he was concerned about the jobs data weakening, and that was the major reason why we could see a cut later this year. I think he probably already knows the CPI number, which is expected tomorrow, and him talking about maybe being able to cut probably means the CPI comes in reasonably good, or at least in line with expectations tomorrow. So that's kind of what I'm thinking. I'm thinking in line with expectations. I will cover them in tomorrow's game plan. Don't forget, 3:55 today. I'll be right back here going over all the data in the market from the current day for a quick trading the close. On that note, folks, I wish you all the best, and I'll talk to you later. Take care.